Hello, everyone. It's Jim Vanderwall at Fraser Basin Council. Thanks to those of you who joined us so far. We're going to give a few more minutes for more people to join us, but hopefully you can hear us. If you have any technical issues along the way here, feel free to send us an email. My colleague Elena Chia will be checking this email, fraserbasin@gmail.com. So if you have any technical issues, let her know. You should also see there's a phone number you can dial into for audio, or you can be listening to this webinar on your computer as well. Good morning, it's Jim Vanderwall at Fraser Basin Council again. We'll give a couple more minutes for people to join. We're expecting a few more attendees. We'll get started on today's webinar. Okay, good morning, everyone, and welcome to today's webinar. Our topic today is accessing financing for First Nations energy-efficient housing. My name is Jim Vanderwall with Fraser Basin Council, and this is a webinar that's part of our First Nations Home Energy Save series. First Nations Home Energy Save first wanted to acknowledge some of our sponsors and supporters of this initiative, which include Indigenous and Northern Affairs Canada, BC Hydro, the Province of BC, and the Real Estate Foundation of BC. But our goals with this program is to help communities reduce energy use. One of the things we're doing is sharing success stories between communities and helping to build capacity in that way. And it also helps to support local economic development. We, for those of you that haven't checked it out, there is a web portal that has a lot of resources and information that we try to keep updated on tools and success stories. Just a few logistical things before we get into the details here. is we are keeping the audio muted so that everyone can hear the speakers today. But you are welcome to ask questions at the end, or you can ask them at any time by typing into the question box. And we can also selectively unmute you if you'd like to ask your question over audio. So just you can type that into the question box later on if you'd like to do that. If you have any technical difficulties, just send an email to the email on the screen there at fraserbasin@gmail.com, and my colleague Elena Chia will help you out. So our topic today is around accessing financing for First Nations energy efficient housing. And this topic came out of a previous webinar that we gave where we were asking people for feedback about things that they'd like to learn about. And accessing financing was one of those topics that came up. We have had a previous webinar on accessing grant funding. So we had a presentation from INAC and the province around some of their programs. So this looks at the other piece around accessing financing, mortgages, and loans. So we're pleased today to have two speakers to provide different perspectives on this topic. Our first speaker will be Stewart Anderson, who's with Vancity Credit Union, the manager of Indigenous Partnerships. And our second speaker will be Candace, who's with the Bank of Montreal and the Director of Aboriginal Banking in this region. So at this point, what I'm going to do, if you just give me a moment, is switch the slides over, and I'll pass the baton over to Stewart to begin with this presentation.
Well, thank you, Jim, and good morning, everybody. I'd like to start by acknowledging that we are actually giving this to you from Coast Salish territory in Vancouver. And I'll tell you a little bit about Vancity. Vancity is a member-owned financial services cooperative. We're based in Coast Salish territory, and we do business throughout Coast Salish territory and also up in Alert Bay in Kwakwaka'wakw territory. Sorry, we're having a little technical thing here. So a little bit about more about Vancity. We're a credit union. That's a member-owned financial services cooperative. That means that the people that Vancity does business with are our shareholders, our employees are our shareholders, and the communities where we do business are our shareholders. So we're accountable back to community, and we work in community to build healthy and prosperous communities. We started in 1946. There was a need for access to financing for houses on the east side of Vancouver. A lot of lenders at the time didn't think that the east side was a good credit risk. So the credit union was formed to accumulate deposits and lend out mortgages for people to buy and build houses on the east side of Vancouver. Since then, we've grown to the largest credit union in English-speaking Canada. We have over 500,000 members and close to $20 billion in assets. So that's who we are today. So we do a lot of work with First Nation governments and a lot of work with respect to home ownership and providing mortgages for people living on reserve. I'm going to talk about a fairly general kind of presentation, and then I think my colleague Candace is going to get into a little more specifics about some of the things that you need to be aware of when you're doing on-reserve housing loans. So we'll start off Vancity. We're a cooperative, as I said. We believe in social justice and financial inclusion, and environmental sustainability of our members' lives and the communities are enhanced. That's something very important to us. So looking at modifying or using financing to improve the energy efficiency of homes in First Nation communities is a great way for Vancity to put its assets to work, and it's a great way for us to reduce our carbon footprint. We are the only carbon neutral financial institution in Canada. So we buy our way there through carbon offsets, so I'll be very transparent about that. But we do look at environmental sustainability as a very important principle for us to follow. So some of the work that we do in First Nation communities is really around access to financing. It's supporting entrepreneurs, it's supporting individuals, it's supporting families, it's supporting First Nation governments, and it's supporting Aboriginal businesses. As I said, housing has always been very key for Vancity and our roots. So that's something that we tend to focus more and more on as communities are looking at ways to enhance the housing stock in the community, create opportunities for people to return home, and also to look at the housing stock in community and how can it be upgraded, how can it be improved, how can it be made, brought up to today's standards from a livability, environmental sustainability, and a longevity perspective. So when we look at housing and home ownership, traditionally, the way that family wealth was transferred from generation to generation was often in the form of a home. That was a way for people to save money. It was a way for people to create safety and security for their families, and it was a way to transfer those assets to the next generations. It's really important that we remember that when we look at homes. And if we look at the environmental sustainability and the livability of houses, it's really important to remember that we want to upgrade and maintain these homes so that we can pass them on to next generations. So the objectives of our housing loan programs are, and you have to be, I guess communities have to sort of have their own objectives as well. So let's look at the objectives that many communities might be looking at: bringing members home, creating opportunities for home ownership, opportunities to finance new construction where INAC money may not be sufficient to build that many houses, but there's demand for more houses, upgrade of existing housing stock, and then energy efficiency retrofits. Being clear on what your objectives are is important, because sometimes those objectives aren't necessarily all working together. So if the objective is home ownership, then the upgrade of existing housing stock may not be as much of a concern. If it's new home ownership or new home construction, then you may be less concerned about upgrading or bringing members home. You might also want to be replacing existing homes in your community. So being clear about what the objectives are will really help you work with the financial institution in determining what the right program is to go forward. So when I think about the role of the First Nation governments really are there to determine policy. They're there to provide leadership. They're there to assist with community planning. They're there to provide and ensure that the infrastructure is there to allow homes to be appropriately serviced and maintained. And in some cases, depending on the program, they may also be the guarantor of the loans. The Indian Act will restricts the ability of a lender to realize on security on First Nation lands. So often, First Nation government will play a role in mitigating the risk of being able to realize on security. But a lot depends on how the First Nation government has determined land use, land policy. So those are all considerations of the government. Some of the key things that we look at when we're designing a program would be the tenure over the land. Is it a certificate of possession? Is it a right to occupy? Is it some sort of modified fee simple interest? So the tenure over the land is critical. Many communities choose to hold the land collectively, and that's fine, but then the borrower and the financing would be arranged with the collective as opposed to with the individual. If there's individual control over land, then the financing and the conversations tend to be with the individuals. This also comes into play the right of possession, the right to transfer, how properties are inherited. And then the other thing that we need to look at is how properties are valued, how property taxes are collected, and whether or not there's appropriate surveys, title, lot allocations, etc. So really, those considerations will determine, from a lender's perspective, who the obligation is with. Is it with the First Nation government? Is it with an individual? Is it with a development corporation? So a lot depends on the structure, the tenure, and how things are managed. So I'm going to divide things up into personal loans. So we would do personal loans with extended amortization for renovations, upgrade, or additions. The reason why extended amortization is important, and if you think about it, if someone's putting a roof on a house, it doesn't make sense to pay the roof off over 5 years when you could pay it off over 15 years. If the life of the roof is 20 years, then we're willing to go extended amortization. That really comes into play when we're looking at energy efficiency upgrades. A lot of times, roof, insulation, upgraded windows, upgraded vapor barrier, all those things could be done through personal loans with extended amortization. And that really is, the individual would qualify for the loan based on their credit history and their ability to pay back the loan. And then we would extend the amortization to allow the life of the asset to basically pay for itself. We're almost at a point now where if people are putting solar panels on their roof, that solar panel will pay for itself with the reduced electricity costs over the life of the solar panel. So that's something to think about. So you borrow the money today, the energy savings then come back to pay off that loan over time. A lot of housing loan programs operate under existing federal government initiatives such as Ministerial Loan Guarantee, First Nations Market Housing Fund, and those programs are very tight to the way those programs are designed, and they fall under federal legislation. There's also an opportunity to do a community-based housing loan program where the needs of the community and the needs of the way the First Nation government is governing that community are taken into account, and there's some flexibility around design of those programs. So really, it's I guess what it comes down to is community plans and goals, and recognizing that each community is different. Each community has different objectives, and each community has different policies and expectations of their membership. So from a lender's perspective, we have to meet the government and the community where they're at and ensure that the programs that we design reflect what the community's needs are. There's lots of opportunity out there to upgrade homes, to do energy retrofits, and build new housing and create opportunities for home ownership. It's really up to the community how you engage with your lenders to do that work. So that's my presentation. If you'd like to get a hold of me, please send me an email, give me a call, or go on vancity.com/Aboriginal communities to learn more about the work we're doing. And I want to thank the Fraser Basin Council for the opportunity to make the presentation.
Thanks very much, Stewart. Before we switch to Candace's presentation here, what I think I'm going to do is just do a quick poll around who's on the line. So what type of organization you work with. So if you could just let us know who you are, that'll help our presenters in understanding who they're speaking to. Okay, I'm just going to close the poll now, and you can see, should be able to see the results on your screen. Oops, where did they go? We'll share those results so you can see got lots of folks in First Nations administration and council, and also quite a few consultants as well participating. So thanks very much, everybody. Just bear with us for one moment here while we switch, and I'll pass things over to Candace. Let's change mine.
Well, thank you very much, Elena and Jim, for inviting me here today. And like Stewart, I want to acknowledge that we're in the Coast Salish territory of the Squamish, the Musqueam, and the Tsleil-Waututh today here. So, and it's a beautiful day. Very, very nice. So I'm Candace. I'm the Director of Aboriginal Banking for BMO Bank of Montreal for British Columbia and the Yukon. So I travel around quite a bit through the province and see a lot of different communities and a lot of different needs in the communities. But what I thought I'd do first is just give you a little bit of an overview of Bank of Montreal and in particular our Aboriginal Banking unit. Bank of Montreal is actually Canada's oldest bank. We're actually coming up to our 200th year anniversary of being the bank in Canada. But in 1992, our Aboriginal banking department was actually established by Ron Jameson from Six Nations, who BMO hired to bring on to actually really develop an Aboriginal banking strategy, because they really saw that there was a need out there in all these communities for some specific programs, because regular banking just wasn't working. So since then, we've continued to really evolve it. Some of our milestones is we were actually one of the first financial institutions to develop an on-reserve housing program, because that was really, as the way that Ron saw it, the key need out there in the communities was improving the housing and housing options for First Nation people. We are the only financial institution involved in the First Nations Market Housing Program, Vancity, I believe All Nations Trust, but out of the big five banks, BMO is the only bank that really saw value in the First Nations Market Housing Program, and I'll talk a little bit more about that later. We're also the only financial institution that really stepped up with the First Nations Finance Authority, and I'm not sure if many of you are aware of it, but really it was seen about in 2005 that there wasn't really options for communities to actually build out infrastructure, and the infrastructure is needed to actually build out the communities, because most communities were only able to get from financial institutions at the time 10-year amortization loans. So their hands were really tied when it came out to putting roads and services and building new administration buildings and gymnasiums, etc. So we actually, at that time, helped support the First Nations Finance Authority get off the ground, as well as really took a look at our own offering to our First Nation communities we were working with, and really pushed and extended sort of the boundaries to actually be able to provide 25-year and in some cases 30-year amortizations on the larger projects that the communities were doing. This is something that is all across Canada. There's 10 people in my Aboriginal banking department, 6 of positions like me across Canada, that all we do is we work with First Nation communities and travel around. So that's what we do, travel around a lot. Well, you have to see it, right? So basically our infrastructure, we can pretty much put anything into our infrastructure program. And as I said, it's really developed, and I'm pretty proud of it, because we're the only financial institution that really can say, we can go out and we can work with you and we can build and do 100% financing of any of these projects that are listed. So sewers, roads, sports and recreation facilities, and we also are doing any of the energy programs as well too. So run-of-the-river projects, solar projects, any of these biofuel projects, anything like that, we are actually working with First Nation communities. We've got a couple of interesting projects where we're actually, the community has gone with like solar panels, and they're selling the surplus to the local, communities, as well as using the existing new technology in their community for their members. So it's pretty cool what's happening. So as I said, we can actually do 100% financing of any of these infrastructure programs. We have standard, construction draws that are applicable that we go over with the communities. It's interest only while it's up and running, and amortization periods of 20 to 25 years is and normal, but on exception, we can go up to 30 years. We've got all sorts of different financing vehicles, because some of these projects are fairly, large. A number of them we've put multi-residential housing in. We've also done housing upgrades through this for the community, where CMHC wasn't able to cover off some of the costs. We've been able to come in and help the community actually improve and put new windows in, put new doors, improve the insulation, mold remediation, and that type of thing. So when we're working with a community, what we like to know, not unlike Stewart, you need to have a plan. So there needs to be some sort of a goal and some sort of a direction that the community and the leadership in the community has decided that they want to do. Like, is it, building more houses, or is it building more, making available more lots so people can, come back to the community and build their own house. So we really kind of work with you and look at, sort of all of the things, the financial statements, etc. Bank of Montreal has two housing programs. I really like to only talk about the on-reserve housing program. Our on-reserve housing program, we can come in and refinance an existing home and get that renovation dollars out. And that's really what I find the most valuable. I know Stewart talked about, extending amortizations, and really most people today are finding it tough just making it from paycheck to paycheck. So to amortize like a roof, you need to almost do it over 20 years, as Stewart said, or 25. And most renovations, you can't do much for $25,000, right? So we actually work with the housing, with the leadership. We develop a housing program. And we will actually look at some really creative solutions in refinancing, either for the community, the band itself, or we will look for the members and develop a program for them. So our on-reserve housing program, basically it's available for purchase, for construction or renovation or refinance, as I've said. And it's single-family homes. As Stewart kind of outlined, there's different land tenures, so we have to understand what the land tenures are. Is it CP or is it, community-held land? We can work around all of these, and we customize the program to the community. Under our on-reserve housing program, single-family homes, as well as we will do duplexes. If you have a lot and that's two families, we've done those before under this. And eligible borrowers that usually one of them has to be a member of the First Nation, and we really use this as a regular mortgage application. So you've got to qualify, the members qualify under regular credit guidelines. They have to be employed, they have to have, sufficient income to cover the mortgage payments, they have to have 5% down, and they have to have a decent credit rating. We are able to get around some issues if there are some historical issues there, but we always, work with the community itself and the leadership. These programs, as I said, are extremely flexible, so the actual individual member's borrowing ability is really, the limit is set by the community itself. Usually we talk with the community housing, how much does it cost to build a house in your community? If it's average $150,000 and that's what they want to put the max at, that's what the max of the program is then. So they determine it. As I said, the down payment is 5% of the project cost or the purchase price, and the borrower pays any expenses out of pocket, but really there isn't anything because of the Indian Act, we aren't able to register a charge, and that's where we work with the community to either provide some assurance that if the mortgage does go into default, that we can work with the community. There are no ministerial guarantees and no CMHC insurance on this product at all. So our rates for our housing loans are basically, there's a bonus 50 basis points off of the posted rates. These mortgages are completely open, so members can pay them off at any point in time. The insurance requirements are set by the leadership in the community. We always give our recommendations, but at the end of the day, it's up to them. And, as far as appraisals, signing documents, because there are so many remote communities, we actually have the built-in where the housing department in that community can sign off on the value of a house, the percentage complete of the house, and any other things that we need as far as security or confirmation. What we do is we actually work with the community housing manager. We provide a booklet with a whole step-by-step instruction as to how members can access the program. And it really is kind of a really good working relationship with the housing manager and getting all of the documents signed. And again, for remote communities, we have sort of workarounds for getting documents back and forth to get the loans processed. So basically, for the members, how they qualify, they just need to have 5% down. Usually we use their subsidy that all First Nations and Aboriginal people are entitled to. We just need to make sure that the project is going to meet the codes of the community, and then we just have to approve it. So that's really what it is. And then it talks about the 3 C's of credit there, because we do rely on that. Again, it's not a social program. We run the First Nations Market Housing Program pretty much the same by basically, it's adjudicated. The only thing is with the First Nations Market Housing Program is there's an option to have CMHC insurance when you take that. And the First Nations Market Housing Program is a little bit more stringent in members being able to qualify. So I guess that's what I say the difference is. First Nations Market Housing Program is awesome, and I really always encourage any of the communities that I'm working with to be involved with it. They've got really awesome capacity building dollars. So as Stewart was talking about, there needs to be some policies around your housing, at your housing department. A lot of communities are still in the, just developing those. The First Nations Market Housing Program can come in and actually assist with that by providing capacity building dollars. So, I see it as a huge value, for the different communities, and I've seen some pretty significant, capacity building dollars given out by the First Nations Market Housing Program. So, I guess just to sort of recap, I've talked a little bit about infrastructure where we're able to come in and really work with the community and build out, lots available for building. We actually are able to really come in and then customize a housing program or different housing programs for both the community to build multi-residential units, elders units, or for the members themselves to actually apply for mortgages, to build their houses or purchase their houses so they can start building equity. Because as again, like Stewart said, that's the most important thing that we, look at when we're working with communities is creating financial independence and self-sustainability for everybody. So that's kind of my overview, and I know I kind of glossed over a little bit of the energy efficient piece, but I know that's a big topic, and again, that I didn't want to kind of re-say a lot of the things that Stewart said. So
yeah, as people have questions about specific energy efficiency issues, I think we can each speak to those.
Yeah.
That's great. So as you said before, we're open to questions, and so feel free to type into the question box there if you've got questions, and Candace or Stewart can respond to it, and we'll just kind of work through the list as we go. You're also welcome to ask the question, and we can unmute your phone so that you can do that. So we had just one question to start with, which is, do these loans require, it says MSG, I think it must mean ministerial loan guarantee, to be signed off by Chief and Council? I don't know if either of you can respond to that.
I can respond for BMO. No, that's kind of the beauty of our own on-reserve housing program. The ministerial loan guarantee program is kind of very onerous for the members as well as the community. So we really thought about that when we developed ours in 1994, and we do not require a ministerial loan guarantee for this program. So what happens is we go into the community and say you want to build, you're thinking you're going to have 10 members that are going to qualify for mortgages over the next year. We then create a $2 million sort of facility for the band, which then the members apply for their individual mortgages under that kind of umbrella. And the band is going to assist us if we run into problems. So they do provide a guarantee, but we don't need a ministerial loan guarantee, and we don't need CMHC insurance on any of those mortgages to those individual members.
Okay. I think the ministerial loan guarantee was a tool that was used many years ago to facilitate financial institutions lending on reserve lands, but I think the market has evolved significantly over the last 25 years, and really the ministerial loan guarantee is somewhat antiquated and definitely bureaucratically challenging, so most financial institutions have moved away from that requirement.
There's also a question from Vera about getting some contact information for the First Nations Market Housing Program. We can certainly follow up with everyone on that. I don't know if either of you had advice around communities that do want to join that program about the best way to start that process.
Yeah, I mean, it really is to engage. I mean, you're welcome to contact me, and I can put you into contact with the person who's responsible for BC. There is a website, like if you Google it, you get into the national one, but I can actually get you into the person who is more directly involved in British Columbia here and the Yukon. And yeah, it's not a fast process. It takes about a year, but it definitely, there is huge benefits for communities, belonging and becoming a part of it. they come in and they will schedule a visit, and they will come actually to your community, wherever it is, and they will meet with you, and then again, listen to where you're at, and then design a program and approve you for the capacity building dollars and the program itself.
Yeah, we have communities where we have a loan program in the community, but and at the same time, they've gone to the First Nation Market Housing Fund for those capacity dollars, because those capacity dollars are available.
Yeah.
And it's really hard for communities to find the resources to develop housing policies, to further develop land codes, to look at what your objectives are, and they have money available to support those initiatives. And then at the same time, then the community has options with respect to how you do the financing. You can either do financing with their credit enhancement product, or you can do your own program that's community built. But definitely, if Candace or I can provide you with contacts, and go to their website, take a look at what they do, and they're pretty flexible, and they're getting busier, but the capacity dollars are really quite good, and it's probably one of the few ways that you can get money into community to build that housing capacity.
Yeah, and it's just the other thing too, is that where we talk about housing policies, and anytime we talk about making a policy, it's such like a onerous thing, right, or overwhelming. I can actually share housing policies from other communities that I've got permission, so you're not like starting from scratch, that you actually have something to build with, right? Again, you're going to take it and customize it and make it your own, but I think it's like share so everybody gets benefit from it.
So that we're not reinventing the wheel.
And reinventing the wheel each time, yeah.
Sure. Yeah, and there's also the housing policy toolkit that Not Tribal Council developed, which is also available to everyone that would want it. Certainly put people in touch with Eric Bluschke if they'd like that, I'm sure. I just also wanted to mention on the housing policy side is that there is another stream of funding from INAC now that does support housing policy. But of course, it's the same budget, it's just an allocation towards policy. So it's great that there is this other potential source of funding from First Nations Market Housing Fund. And what we will do is, in our follow-up to everyone after the email, we'll share that information about who to get in touch with. If you're interested in doing that, sounds like it's worthwhile, even if you don't pursue the financing options with them. Another question from Dale. If an individual member defaults, how much of the risk is BMO and Vancity willing to accept?
Well, for us, it really depends on the community and the program. So, and the reason why I say it depends on the community and the program is that depending on the land code and whether or not there's the option for A-to-A leases, or whether or not there's an option for us to take possession of a property and then sell it to a third party, be it a member of the community or not, would all determine how much risk we're willing to take on, or what we sort of negotiate or share with the First Nation government.
Yeah, so and Bank of Montreal, we do have some risk sharing agreements with some of the communities that we work with. But it's really interesting times right now with all the A-to-A leases, and so it's a really hard question to answer because there's no blanket answer. Yes, we entertain a risk sharing, but it depends on if we can go in and sell that. What's the market like? Does the community want to be involved in the selling of it first before we actually take it over? So there's a whole bunch of questions, and it's all kind of new days out here in BC right now.
Yes, definitely.
Yeah.
Question from David. He says, nice to hear your voice, Stewart. David Carson. Some people who know you folks on the line here. Is it the same for Vancity in accepting INAC subsidy as down payment on a mortgage?
Yes, we can accept that. And sometimes, depending on the land value and the transferability of the land, sometimes the INAC down payment isn't a requirement, wouldn't even be needed for a down payment, to qualify for a down payment, because the land value on its own could be significantly more than what we would require as a down payment.
Question from Gerard is, what debt ratio do you base a mortgage off of?
Okay, it's the same as anybody off reserve would. So what we tend to do is we gross up the income of the individual on reserve by usually about 25 to 30%. Yeah, depending on depending on their income levels. And then it's I think it's 32% GDS and 42% TDS is what we look at. Now we can exceed those by a couple of basis points, depending. Again, each situation is looked at differently, but it's the same guidelines that anybody off reserve applying for a mortgage would have to go by.
Thank you. That was really intelligent, because I was going to say, well, I know it's 32-42, but I wasn't quite sure which one was what. So thank you for explaining that.
And GDS is gross debt service ratio, and TDS is total debt service ratio. So the total debt includes a credit card and that sort of stuff, car loans, that type of thing.
Yeah. And the reality in British Columbia, if you're looking at the more urban situation with housing prices being so high, you're not as concerned about, sort of the debt equity ratio as you're concerned about the individual's capacity to service the debt. And so that's why that's really the driver. It's it's the 5 or the 10% down payment, but then it's really the cash flow you have to pay back the loan, because this is a loan that the individual has to pay back. So it's not like dealing with rent arrears. This is dealing with obligations that are personal obligations to pay back those loans.
Okay. There's a comment from Leah Lawson here. He says we have the First Nations Housing Fund coming to Vancouver Island next week. Ruth Deecher, I guess that's the person we're talking about, to meet with our housing committee and chief and council. And if the individual inquiring is located on the island, she might work that into her schedule. So anyway, we can follow up to see if that works or not. But in any case, we'll make the connection there. Question from Vera is, do the lands need to be CP'd to access non-ministerial loan guarantee? And what happens when IR lands are in coinage?
Well, it really depends on who the borrower is. If the borrower is an individual, then they have to have the right to possess or occupy those lands. If the lands are held completely collectively and there's no individual kind of parceling out of lands, then really you're lending to likely the First Nation government or the First Nation government's housing authority as the obligant.
Yeah, we don't, we don't care. We'll work it out whatever way that the land is. We go to communities where really we just get the chief and council to sign off that this person can have this lot in this spot,
right? The right to occupy.
The right to occupy. We don't really need a CP, or we don't need, anything, a lease. We can just do it, and that's where it comes down to customizing what the community wants as far as the housing program.
In that case, we're much more likely, or the lender is much more likely to require the covenant of the First Nation government, because really it's up to them to determine who has the right to occupy that land.
Right.
So really they become the backstop for us should that person that has the right to occupy not able to pay back their loan.
Okay. Another question here from Kimberly is, are you currently working with any remote First Nations, or have these programs been more focused in the Vancouver area?
I can speak to that. No, I'm working with remote communities, like sometimes 3 and 4 hours outside of a major, like a main center, and I'm talking like Prince George, 3-4 hours outside of there, 4 hours outside of Whitehorse. We've got programs established all throughout British Columbia and Canada. We have one that's actually up in way northern Ontario. Just Womengy, I think is what the name of it is. And it actually was one of the ones that was done through the First Nations Market Housing Fund and Bank of Montreal. And we financed the build of 20, I believe it was 20 homes. And what then Womengy did is they then sold the homes to individual members. They actually built them all under our infrastructure program. And then with the First Nations Market Housing Fund, individual members then got mortgages and purchased them out. So in effect, Womengy acted as the developer of that sort of development. community. So that was pretty cool. So yes, we've got remote programs. We've got there's over 150 on reserve, Bank of Montreal on reserve housing programs out across Canada right now. And the interesting thing to note is that because we go with credit guidelines, so people are employed, they've got credit history, etc., there has been actually no default over the 20-year period that we've been running our own program. Right? So no ministerial guarantee, no CMHC insurance. And the reason for that is, it's not that we don't have problems. There are people that have problems, but we work with the housing department, and they will either say, well, he lost his job, we need to re-amortize the mortgage, so we do that, or, you know, there's no way he's ever going to pay this back. We're going to just take and find him a social housing place, and then we'll sell it to some other member who is qualified. So that's kind of the remedies, and we never come in and repossess the house or kick the people out, or we don't do that. We just, you know, we understand, and so we're trying to take a very partnership approach to actually improving the housing situation in communities.
Absolutely, and if you look at, you know, financial institutions and their track record for qualifying individuals for conventional mortgage financing, you know, the actual default rate, or where you actually have to go and repossess and take over a property, is so low. It's a fraction of a fraction of a fraction of a percent. So why would we have a higher standard, a higher level of concern or care in working with First Nation governments? So the experience is that people tend not to default. If people get into trouble, if they get into some financial situations, you know, as Candace said, usually you're working with the First Nation government, you're working with the community to ensure that that person succeeds and that housing stock is maintained in the community for the community's benefit.
And I would like to say, too, as Stewart said, like the national rate of default on non-First Nations is like a fraction of 1%, but the First Nations is even lower.
Yeah.
Question for Candace is, you mentioned solar loans, and this person, as Murray, is wondering what community solar projects you're directly involved in.
I can't because of client confidentiality, but there is a number of them, and we also have had some wind energy ones as well too that we've been involved in with the wind turbines, where they purchase the wind turbine for the community, and it's a great way for them to actually provide power to the community members, and in some cases end up selling surplus, which is great.
And solar energy projects that, you know, 5 years ago made sense from an environmental sustainability, but you know, probably required some subsidy from a financial perspective. Now don't require that subsidy from a financial perspective because the price of those solar panels is significantly lower. But the good contribution in terms of energy savings is such that now they're starting to pay for themselves. So they actually are cash flow positive for communities, either on an individual home basis or on a larger basis. And there's been some really cool pilot projects in different communities just to reinforce and show that the price of solar has come down so much that it actually now is starting to look like it's a very kind of self-financing initiative.
Question again for you, Candace, is does the Bank of Montreal provide financing for subdivisions or individual lots in First Nations?
Yes. Yeah, we do that. Yeah, and we will do those over 30-year amortization. So like if you need to build the roads and build the services like the water, sewer, electricity, we actually can finance that whole part of that project. We also do it for communities, not only just for their housing, but we do it for economic development. So say if you have a section on your land use plan says you're going to put like a business park in a certain area, we can actually go in and finance that, even though it's not for housing, it's for economic development. But that all creates revenue, that creates the ability for the First Nation to do more in their community.
That was a question.
Ditto. Probably ditto for Vancity. Question from Neil is, without a ministerial loan guarantee requirement on your programs, is the borrowers then liable in the event of a default?
Technically, okay, if it's on the land which is community land, so under the Indian Act, we can't go in and repossess the asset because it's on band land. yes, we do have the ban sign, a guarantee, or it's not really a guarantee, it's more of a commitment to work with us is how I like to position it. Because at the end of the day, we need to have your commitment that you're in partnership with us, working with your member to actually get housing, financing for housing. And one of the things, and I know I get this question a lot from communities when I go out, but you got to look at it, you've got a social housing program, and you've got this big wait list of people that want houses. So a lot of those people on that wait list have got jobs. They can afford to go get a mortgage. So this just enables you to be able to get them off your social housing wait list and put them onto a wait list for a lot to come up where they can actually apply for a mortgage. And that's been really successful in a number of communities. And, I always say, I will give you references, like we don't, as soon as the mortgage defaults, don't say, okay, band X, you've got to pay us back this $150,000. We work with that leadership, the housing committee, and we work with them to actually resolve the issue in a way that's good for everybody. It's not like the CMHC and the ministerial guarantee where they just debit you the following year for it, right? We don't do that. So.
Yeah, and a lot of times there's an agreement between the lender and the First Nation with respect to notice and who notice goes to and time to remedy and what the different remedies are. So a lot of those are kind of can be stated in agreements so that there's clarity and people know what's going on and what the obligations are.
Okay, great. Question from Lynn, detailed question around the financing is why the gross up of non-taxable income? Isn't it better to deal with net income or cash in hand?
You gross up income because all our credit adjudication models are based on income after tax. So if someone isn't paying tax, then they would qualify for more if you gross up their income. So it's a way to show the benefit of living on reserve, working on reserve, and the work you do benefiting the reserve, then it does help you in qualifying for a mortgage.
Great. Positive comment from Nick about and Candace about the important point about the low default rate. And I guess a further question around solar is, I can't speak to maybe some of your specific projects, but does anyone have an example of off-grid solar being cost-effective without grants?
Off-grid solar, the ones that we were involved with were prior to the significant sort of decrease in the cost of the solar panels. So those required grants to make it work, and much less financeable. The cost of solar panels today and energy costs are such that it is very financeable today, and almost 100% financeable.
Okay. I think that's our last question for the moment, unless anyone has any burning questions they'd like to ask our speakers. Well, I think we've had a really good discussion and great questions here, so I appreciate everyone's questions and engagement here on our webinar. I guess at this point maybe we'll draw things to a close and thank Candace and Stewart for their time and for giving their presentations and answering the questions. As we've mentioned before, we'll follow up with you with some of the contact information that was asked about earlier. There'll also be these PowerPoints, and our recording this webinar will be online as well if you wish to look at it. We noticed there's some people who signed up who weren't able to come, so others will be able to share this information. So thanks everybody, and
for having us.
Okay.
Yeah. Thank you very much.
Have a good day.